Good morning, everyone. I am the presenter today, and I'll be discussing intangible assets. Our goal for today is to discuss the difference of government accounting and private accounting when it comes to definition, measurement, presentation, recognition, and the recognition of intangible assets. First, let's proceed to the definition. Both government accounting and private accounting defines intangible asset as identifiable non-monetary assets without physical substance, and it has three essential elements, which is one is the identifiability, which means it is separable and arises from binding arrangements. Second is control, which is the entity has the ability to enjoy these intangible assets and prevent others from enjoying or benefiting from it. Third is it has future economic benefit or service potential, which may include revenue from the sale of product or services, cost savings, or other benefits resulting from use of assets. Let us now proceed to initial measurement of intangible assets. They are also the same that the initial measurement of intangible asset are measured at cost but depends on its acquisition, which is similar to those of PPE and investment property. First, we have the acquisition through purchase. The measurement at cost must be purchase price plus direct cost, including non-refundable taxes, but excluding trade discounts and rebates. If the payment is deferred, the cost is the cash price equivalent. If it is from the non-exchange transaction, the measurement is fair value at the acquisition date. If it's through exchange transaction, we have two categories, with commercial substance and without commercial substance. With commercial substance, the order to priority, fair value of asset given up plus cash paid or minus cash received. Second is fair value of asset received. Third is carrying amount of asset given up plus cash paid or minus cash received. And without commercial substance, the measurement of cost is carrying amount of asset given up plus cash paid or minus cash received. And if it acquisition resulting from entity combination, it must be measured at fair value at the acquisition date. We also have what we call the internally generated intangibles or the self-generated intangibles. First, we have the research phase, which is original and planned investigations undertaken with the prospect of gaining new scientific and technical knowledge and understanding. And all the expenditures under the research phase are recognized as expense. Some example of research phase activities are activities aimed to obtain new knowledge, search for evaluation and final selection of applications of research, findings, or other knowledge, search for alternatives or materials, devices, products, processes, systems, or services, and formulation, design, evaluation, and final selection of possible alternatives for new or improved materials, devices, products, processes, system, or services. Next is we have the development phase. It is the application of the research findings from the research phase or other knowledge to plan or design for the production of new or substantially improved materials, devices, products, processes, system, or services. The expenditures in the development phase are capitalized if the entity can demonstrate all of the following. First is technical feasibility of completing the intangible asset, the ability to use or sell the intangible asset, ability to use or sell the intangible asset, probable future benefits or service potential, availability of adequate resources needed to complete the development, and to use or sell the intangible asset. And lastly, it is reliable measurement of the cost of the intangible asset. Next is the subsequent measurement. And in government accounting, we only use the cost model, which is cost minus the accumulated amortization plus accumulated impairment losses. While in private accounting, we can use either the cost model or the revaluation model, which is in the revaluation model, it is fair value minus accumulated depreciation plus accumulated impairment losses. But accordingly, the revaluation model is used only if there is an active market for the intangible asset, which is rarely the case, but it can happen. Since we mentioned the amortization in the two models, let us first define what is amortization. Amortization is the systematic allocation of the depreciable amount of an intangible asset over its useful life. For us to know or to measure the accumulated amortization and accumulated impairment losses, we need to first classify or assess whether the intangible asset has indefinite useful life or finite useful life. The indefinite useful life means that there is no foreseeable limit to the period over which it is expected to provide economic benefits or service potential to the entity, which the amortization, it is not amortized but tested for impairment at least annually. And when it comes to finite life, it has a limited period of benefit to the entity, which is it is amortized using the straight line method over a period of 2 to 10 years. And take note that the residual value is assumed to be zero except when the entity has the ability to sell the assets at the end of its useful life. Let us now proceed to the presentation of intangible asset. In both government accounting and private accounting, intangible assets are presented separately from goodwill. Intangible asset is presented as a one-line item under the heading Intangible Assets or other intangible assets in the statement of financial position or the balance sheet. The breakdown of the line item is disclosed in the notes. Goodwill is presented separately under a line item described as goodwill. I have here the actual presentation of intangible asset in a statement of financial position or the balance sheet. Next, we have the recognition of the intangible assets. Government accounting and private accounting is also the same in recognizing intangible assets. An intangible asset is recognized if it meets the definition of intangible asset and the essential recognition criteria for assets, as I discussed earlier on the definition part of the intangible assets. Lastly, the recognition of intangible asset. The government and the private accounting is also the same when it comes to the recognizing the intangible asset. An intangible asset is recognized when it is disposed or no future economic benefits or service potential that is expected from this asset. On the recognition, the difference between the carrying amount and the net disposal proceeds, if any, is recognized as gain or loss in surplus or deficit in government accounting or profit or loss in private accounting. Let us now proceed to the questions. Question 1 from Ms. Ponciano. What happens if an expenditure is not clear on whether it is a research or a development cost? As being discussed or mentioned earlier, if it is not clear whether an expenditure is a research or a development cost, it shall be treated as research costs. Second question is from Ms. Haji. Why is it critical to determine whether the related activity for an internally generated intangible asset is under the research phase or development phase? Because as being discussed earlier in the development phase, not all of the expenditures in the development phase are capitalized. It is only capitalized if all of the conditions listed in the GAM for NGAs are met. Unlike in research activities, unlike in research phase, all the expenditures are immediately expensed. Third question from Ms. Gregorio. What is the difference between research and development phase? It is also being discussed earlier that the research phase is the plan of investigation undertaken with the prospect of gaining new scientific and technical knowledge and understanding, while the development phase, it is the application of the knowledge obtained from the research phase. Fourth is from Ms. Lely. What is the treatment of PPE that is used in R&D activities? We have two categories. If the item of PPE has an alternative use, meaning it can be used in various R&D activities, the expenses or the cost of the PPE is capitalized and depreciated, and the amount of depreciation is recorded as R&D expense. And if the item of PPE has no alternative use, meaning it can only apply in one R&D project or activity, the cost of the PPE is expensed immediately in its entirety as R&D expense. Fifth is from Ms. Galula. Is there a specific intangible asset account that is for government agencies only? Based on what I've read and based on my research also, the intangible assets in private accounting and government accounting is mostly the same. I haven't encountered any intangible asset that is exclusive only in government accounting. Next is we have from Ms. Ruiz. What is the measurement of cost incurred in the development phase if the intangible assets are self-generated? As being mentioned also earlier, if all the listed conditions in the GAM for NGAs are met, the expenditures or the cost incurred in the development phase is capitalized. Seventh question is from Miss Miranda. They are almost the same with Miss Marquez. The question is, why are internally generated brands, mastheads, publishing titles, and customer lists not recognized as intangible asset? Well, the cost of generating an intangible asset internally is often difficult to distinguish from the cost of maintaining or enhancing the entity's operations or goodwill. And for this reason, internally generated brands, assets, publishing titles, customer lists are not recognized as intangible assets. It is according to IAS 38, which is the intangible assets. And lastly, we have from Mr. Austria. Is it possible for the government to sell their intangible assets? Based on what I've read and researched, possible na mabenta ng government yung intangible assets nila. But generally, wala siyang active market. Hindi siya talaga for selling. That's why yung kanina rin sa subsequent measurement. That's why hindi siya subject sa revaluation model kasi it requires active market of intangible asset. And that's all. Thank you for listening.